So, good jobs. What happened to good jobs in our economy?
Well, obviously there's a lot of focus on this topic today, but we've been heading for a reckoning in the labor market for some time. It's been about 40, 50 years now since labor in just about all of its forms has been under enormous pressure. So companies aren't investing in people. Our education system is doing a poor job of preparing people for the skills of jobs of tomorrow. And meanwhile, the labor market's getting more complicated all the time. So the half-life on skills continues to go down. And I'm struck by a few statistics that illustrate the lack of corporate focus on this. So from the post-war period to the early 70s, labor productivity and wages traveled almost in complete lockstep. Since then,
correlation.
Complete correlation. And then since then, labor wage rates have been basically flat. They've gone up a little teeny bit. And productivity has continued on the exact same curve. So just less is being shared with workers. You see stats like in the 60s, the CEO ratio of pay to the average worker was something like 20 times. Now it's over 300 times. And so workers have been under a lot of pressure. Consequently, we have this thing, in COVID, we call it the Great Recession, and everyone's wondering, why is it happening? The reason it's happening is because most jobs suck. And just think about the qualities of the average job when it comes to how you're paid.
It's not funny,
It's
right?
not funny. It's not funny, and it's got to change. And it's got to change not just for the well-being of workers, but for the well-being of businesses. And that's what we're doing in our investment.
Well, and I think about Tim's conversation just with Rob Falzon, it's not just about pay. And if anything, the pandemic has taught us, right, that, people are overwhelmingly saying, I want some balance here. I want to work, I want a successful career, but I got other things going on in my life. So there's more to fulfillment, right, when we step into an employer's building.
Yeah, for sure. Pay matters. You look at the success of Costco, and I just pulled up their stock chart before we came in here. Costco pays the average worker a little over $25 an hour. The federal minimum wage rate is $7 an hour. Costco has a 9-year average tenure, 95% internal promotion rates. And consequently, their cost of hiring, their productivity of these average employees is really, really high. And by the way, they're competing with lots of other, low-cost retailers.
Right.
And they're winning. And they're doing it with a good job strategy.
And they were early with healthcare benefits.
That's right. Something like 90% of their frontline workers actually have health benefits. So there are people out there who are doing this, but on the pay and benefit side. But that's not all there is to it. You heard in the last session, if you just compete on pay, you're going to end up creating an environment that's very transactional with your workers, and they'll end up going to the next highest bidder as soon as someone wants to bid them up. We actually in our business, we have a very clear.
Is Wall Street maybe getting it wrong?
Pardon me?
That is Wall Street, because we've talked so many stories. They're often among the most read on the Bloomberg terminal. That the amount of competition that's in the financial space right now for workers, and it often is, okay, we're going to up your starting, or we're going to up the bonus. It feels like a financial component. And
that's part of what scares investors. Because they think it's got to be some kind of zero-sum game between workers and employers. I read a really interesting report just yesterday from a friend of mine, Ben Zweig, who's a professor at NYU. Yeah. And he, according to his reckoning and his partner's reckoning, toxic work culture is a 10 times greater predictor of employee attrition than pay is. Toxic work culture, 10 times more important than pay. Whether that statistic is exactly right or not, I don't know, but it's certainly a huge factor. When workers are motivated by they're feeling a sense of mission in their jobs, not just the mission to make as much money for shareholders they've never met as possible. It's not a very inspiring mission. But when their mission is they understand what they're doing and there's a purpose to it. If they feel like their company has their back in terms of training and promotion and where they can go with their job, if they feel psychologically safe, like their opinions are valued and that they can actually help to make their workplace a better place by expressing those opinions, those are the qualities of a good job, combined with pay and overall fair treatment.
And just to lay it out so it's really clear, these are the 4 criteria, right, that you talk about in terms of creating a good job: fair treatment, promising future, psychological safety, a sense of purpose.
That's right. So we did. So our business seeks to invest in businesses that are helping to create good jobs. And so in order to do that, we had to come up with a definition of a good job, which is surprisingly challenging to find. Yeah. So we spent a couple of years working with a consulting firm and sort of deploying all of the capabilities of our of the business that we're in towards trying to come up with that definition. And the product of that was that there's really those four things. It's fair treatment, which was everything to do with pay and benefits. It's a promising future, which is sort of training and career path. It's psychological safety, which is the feeling that your opinion is valued, that you have a sort of connected supervisor and that you can express yourself without fear of retribution from your boss. And then a sense of mission where you feel like you're adding something to the world by your work, not just helping investors to do better.
Okay, forgive me, but help me out. Private equity guy who's talking about the creation of a good job. I think many would argue private equity is so well known for buying a company, cutting costs, selling it, making money for their investors. You're doing it differently. So tell me why, tell me what your experience in private equity has said we can do this better.
So look, I've always worked at places that valued employees. But I do think that if you look at the sort of arc of private equity's history, if you look at where it came from, the whole idea, sort of founding idea behind private equity was there's a lot of companies in America that are bloated. They have too many people, they pay them too much, there are too many benefits, and that we can make those companies more efficient. So without getting into the sort of moral, ethical questions about whether that's a good thing or bad thing, I think that investors generally have done a good job of making companies more efficient. But we're now at risk of doing that job too well and solving a problem that companies no longer have.
And making a stakeholder potentially happy, your investor.
Yeah, but I think not even our investors happy. That's the funny part, because the big challenge that most companies have today is not that they're paying their people too much or they have too many people. Every company we talk to, it can't grow fast enough, can't grow as fast as they'd like to because they don't have enough qualified people and they can't retain them. That's the business problem that needs to get solved today. And the nice thing about private equity is when you're in a private equity context, you have the benefit of not being in the glare of a stock market where your stock price changes every second.
Right.
You have the ability to actually do things and invest for the long term. And I believe that the future of private equity is going to incorporate a lot more sophisticated thinking about workforce health.
Something that struck me in our planning call is that you said this is not about a company asking if there are human beings out there to hire, but rather can a company attract those with the skills you want and then, of course, perform well on the job. That's what it's about.
Well, that is what it's about attracting them and it's about retaining them. So, it's interesting. We own a home health business that specializes in doing speech therapy, autism therapy, occupational therapy. It's mostly in a home setting.
Yeah.
And the challenging thing about that industry is, for Circle of Care, the business we own, the challenging thing about that industry is there are many more children who need this service than there are therapists out there to provide it. And that's a problem across healthcare, by the way. That's a problem across many skilled trades. Try getting an electrician or a plumber to come to your house. This is a problem across the economy. Our strategy with that company is, how do we become the employer of choice?
Right.
And how do we become better at going and finding the right people who are the right fit for our company, developing those people and retaining those people? And that's the way you build a great business. So yes, the natural byproduct of that is good jobs and happier workers, but it's also just good business.
Well, is there a question you would, maybe pose to this audience in terms of those who are leading companies, managing companies, owning companies, about what they need to be thinking about as they shape their workforce and do hiring or holding on to the people they have?
So I think one of the answers to this sort of corporate, almost prisoner's dilemma that exists out there, which is, corporate leaders are asked to maximize shareholder value. And that's, so they are compensated based on how they do that. Shareholder value is a reflection of business metrics. And the problem with workforce issues is there are no good business metrics out there today that allow people, that give managers the permission to invest in their workers and say, look, I was doing it because look at this workforce health metric. Some companies do that. But I would encourage business leaders out there to think more in terms of what can you communicate around your workforce health? What sort of metrics can you voluntarily provide so that you can get permission to actually make the long-term bet that I think most business managers know is important?
Well, because it's interesting, because I said to you, all right, so when and this is for obviously publicly held companies, but when the earnings come in, I'm not saying, well, you hired workers, did you create good jobs? Like, it's not coming from us. It's not something, we talk about multiple stakeholders being important. Business Roundtable did it years ago, pre-pandemic. And yet, it still doesn't feel like the follow-through is there.
Yeah, it's funny. I remember, Home Depot, a company that has a reputation for, investing in its people and providing greater service on the shop floor than you could get at other places. when they announced early in COVID that they were providing danger pay and increased benefits and things like that for their workers during COVID, the next thing that Wall Street does is savagely punish them to the tune of billions of dollars because, gosh, we must be taking something from shareholders and giving it to workers. I think that zero-sum game misses a lot. And I think that, frankly, when you do things and invest in workers in ways that build long-term prosperity, I think we've got to find better metrics to give people credit for that. Because I think there's plenty of managers who would like to do that.
Right, right. But we don't have it yet.
We don't have it yet.
What's the business case for creating good jobs? You guys have done the work. You say you're investing in companies that are creating good jobs as well. So give me some of the specifics that you said, okay, this is why it makes sense. Because ultimately, a company is defined by its success.
So it's interesting. We've
Financial success often.
So we've worked a lot with a group called the Good Jobs Institute, which comes out of MIT. There's a professor there named Zeynep Ton who wrote a book called The Good Jobs Strategy. And we've had them involved in helping us look at certain companies through our diligence process when we're thinking of making an investment. And they looked at a restaurant company for us. Actually, this is before COVID. This was the first engagement we'd done with them. And I was a little worried it was going to be about, oh gosh, let's do this nice thing, this nice thing, and this nice thing. What came back was, this company can't grow because its internal promotion rates are so low, because its attrition rates are so low on the shop floor, they're not promoting internally. Their customer service levels are going down, which means their customer retention rates are going down. Their food costs are going through the roof. This is a company that was making something like $12 million, $13 million of cash flow. And they identified something like $20 million of employee-related cash flow opportunities. And the point was, if you can get your retention rates up, you can get productivity up, you can start addressing things like your ability to grow and address service levels. All of these things have real dollars and cents cost, but we're really bad right now in the financial community. We're really bad at assessing those things.
Well, and I think retention, attrition, we talk about it, the cost to company, but you're right. I don't know that we spend so much time on it. What's interesting too is, what are companies' responsibilities in terms of kind of the unofficial, official contract that they have with workers, in terms of bringing them along, growing them? We hear a lot about upskilling and the need for doing that. What's the responsibility of companies along those levels as well?
So I think there's I think that there's a real opportunity for business leaders to start thinking about the world through the eyes of their workers more than they do. And I think that what I've found in any case is, there are actually some relatively easy things that you can do that will improve the culture and productivity of a workforce. One great example, when you think about mission and you think about sort of imbuing a certain sense of purpose in a company, fortunately, most companies out there today do have a purpose. But most companies do a really bad job of communicating that to their workers. So we own a company called Penn Foster, which is the country's largest online vocational training business. And we asked their workers, how do you feel about the mission? 90% of workers said they're excited about the mission.
Oh, okay.
So this is a mission-driven company, 90%. But then we asked them to define it, less than 10% of them could. And they didn't know whether the company was really an education business, which is maximizing for diplomas, or whether it's a vocational training business, which is maximizing for job placement, or whether it's a job tech business that's maximizing for data around the latter of those two things. So my point here is that there are roughly 1,000 workers there are all doing slightly different things, disconnected from the overall strategy of the company. Now, we in the boardroom think, oh no, we understand. This is a job tech company. No, it's simple. But the people that are actually doing the work don't know what it is. So spending time on things like, why do we exist? How do we communicate that effectively? How do we compensate managers on metrics related to our mission? These are things that actually drive huge amounts of alignment internally. And they result in things like higher retention rates and greater productivity and all kinds of other things that all companies should want.
I keep asking only because we keep asking, certainly with our guests on air and certainly the conversations we have in the newsroom more, and I talked about it with Fran earlier, is this a blip? Like, I'm trying to get a grip of are we changed forever in terms of how we work, how we approach the relationship between bosses and employees?
I think that there's a long-term secular thing happening in our economy, which is you can't keep cutting labor as the path to greater productivity. You just can't. There's a point at which that has to reverse itself. And I think we hit that point, and we hit that point around the time that COVID happened and Sean a much brighter light on all these issues. So I think we're in for actually a long-term reversal. I certainly hope we are. And I think that that's going to be not just how companies behave and what the sort of social contract is between employers and employees. I think it's also, frankly, how our whole society approaches questions of, what is a good, what is the right way to get educated? This idea that you can kind of go through, K through 12, maybe college, and then work for the rest of your life in one or two jobs. That's gone. So I think there's how you get the skills of tomorrow and how you keep traveling through the workforce and upskilling yourself over time. All these things are changing rapidly, and I think much for the better. And I think there's a huge opportunity, social opportunity and economic opportunity embedded in all that.
So a new cycle, because one of the other things that struck me when you and I talked in planning for this is that we are coming off this 40-year cycle when it comes to jobs. We need to realize that things are different.
Yeah, I mean, there was a period, there were all kinds of issues in the post-war period, there are all kinds of different issues, but the social contract between leadership of companies and their employees was much different than it is today. And a lot of that changed around the time that Milton Friedman wrote his thing about the social responsibility of companies is to drive shareholder value. But it wasn't just that. There were a whole bunch of things that were breaking down in the early 70s. And I think now we're in the process of beginning to repair them. And the one thing I'll just say is smaller private companies, family-owned businesses, they have an opportunity to do better. I think often they are doing better at this than large corporations where change takes longer. And so we're really excited about the opportunity in the little part of the market that we play in, which is sort of middle market.
Well, you do wonder about all the private money that's been out there that's allowed companies to stay private longer.
That's
right.
right.
That is shaping the workforce. Is that part of it?
It is part of it because we have the permission. We have the permission to make long-term investments. We have the explicit permission from our investors not to think about tomorrow's stock movement or even next quarters. We have the permission to actually try to maximize value for a company over 5 years. And that gives us, I think, a really big opportunity when it comes to things like workforce that are so poorly understood in the public markets.
All right. Just to sum up, just got about 40 seconds here. If we whittle it down, is this really, and I feel like it sounds so basic and so trite, but really thinking longer term. We're part of the problem. I say this a million times in terms of business journalism, that we are constantly quarter to quarter. I try to think longer term when I'm talking to executives, but is that how we need to think about in terms of shaping our workforce, who we want to work, kind of growing our workers, which ultimately grows our companies?
Yeah, I'll just say that I think this reckoning has been coming for a long time. I think a lot of healthy things are going to come out of it. I think it's a big business opportunity. And I think when we talk about things like inequality and all these other things that we talk about, get to the root of it. A lot of it's got to do with what's happening in the workforce economy.